In this example, we're going to look at the treatment of a secured creditor with a fixed charge in the liquidation process, so to see how that claim is settled. Now, a creditor secured by a fixed charge or a specific charge represents all those claims against the company that's being liquidated, whereby the creditor has a fixed charge against specific property. So, for example, if buildings are given as security to a mortgage holder, that mortgage holder has got a specific charge to those buildings. Now, if a creditor has a fixed charge or a specific charge on a specific asset item, the control of that asset rests with the secured creditor. So in a liquidation process, the liquidator has no control over that specific asset item. However, depending on what the creditor agrees with the liquidator, the property can be dealt with in either of two ways. Either the liquidator may pay the secured creditor the amount that creditor claims. So if you've got a mortgage, the amount of the mortgage that's still outstanding, and then the liquidator claims the property and he disposes of that property as part of the process of realizing the assets of the company. Or the creditor may proceed with a action to sell off the property, but then any excess that he makes on selling of that asset needs to be returned to the liquidator for distribution through the liquidation process to other creditors or to the shareholders, depending on the case. So any gain that is made on selling of that asset needs to be returned back to the liquidator. So we're going to have a look at this example to see what the treatment is if the proceeds on selling of the asset is not sufficient to cover the claim of the secured creditor, how that is treated in the liquidation process. So in this example, we've got building with a cost of $150,000. On that building, we've got accumulated depreciation of $36,000, giving us a net book value of this asset of $114,000. The mortgage that is still payable amounts to $110,000, and the estimated realizable value of the building is $100,000. In our statement of affairs, we will list this building net of the accumulated depreciation, so the carrying value of the building of $114,000, and against that we will note that there's a claim of $110,000. We know our estimated realizable value of the building is $100,000, so there's no surplus to be included as part of the realization of the assets for the liquidator to take into account. However, if the building is realized for a value of $100,000, we'll see that there's still an amount that is owed to the mortgage holder of $10,000. Now, where do we include this additional claim or this portion of the claim with regards to the ranking of the creditors? Now, we know that when ranking our creditors, the secured creditors with a fixed charge are paid first after the liquidator has been refunded any of his expenses and has been paid his remuneration. The first creditor who's paid after that are the secured creditors with a fixed charge. So up to the value of the asset that is at which the asset is realized, so in this case $100,000, will be covered in the first step of the payment process. So he'll receive $100,000 directly after the liquidator has been remunerated and refunded. But that extra $10,000 is not proved as part or together with the other secured creditors with a fixed charge. The $10,000 actually moves down in ranking, and they are proved as part of, together with the unsecured creditors. So later down in the process. So we have our secured creditors with a fixed charge, thereafter our secured creditors with a floating charge, then any preferential unsecured creditors, and then together with our other unsecured creditors, this extra portion or extra claim will be proved. In the summary of affairs, such a creditor, that extra bit on that is not covered by the realization of the asset that was given as security, they'll be included or referred to as a partly secured creditor. But as I mentioned, they'll prove that after or together with unsecured creditors. I hope this illustrated to you what to do in the situation where an asset does not realize the total claim of the secured creditor. If you have further questions, please feel free to post questions on the My Guru site, where we'll deal with it in more detail.